Making money in trading and keeping your wins are two entirely different things. In this video, I'll walk you through a 3-step process for recovering like a champion boxer from any trading loss. The skill of mentally resetting after a loss is what allows successful traders to continue being profitable, even after taking hits of $6,000, $49,000, or as much as $600,000. My name's Créde. I'm a high-performance and trading psychology coach. I help traders and hedge fund managers to overcome destructive habits and reach elite level discipline and consistency. To be a consistently profitable trader, you have to be able to deal with inevitable losses so that you can minimize the impact of them on your trading account. But beginner traders tend to view losses as a sign of failure, and so they try and avoid them at all costs. But this thinking is very problematic. It leads to a preoccupation with the outcome of the trade. And this exacerbates problems like hesitating to take a trade, jumping out of a winning trade too soon, or even revenge trading or going on tilt. Truth is that many successful traders only have win rates of 50 to 55%. Steve Cohen of SAC Capital said in the book Stock Market Wizards that his best trader only makes money 63% of the time. Losses are not the enemy. They're an inevitable part of the game. The real problem occurs when you let one loss influence your behavior on the next trade or the next series of trades. Let's say a trader takes a loss of 10% of their whole trading account. In the ideal perfect scenario, that trader resets to neutral and approaches the next trade exactly like it was the first trade of the day, and their only focus is on executing their plan to a T. They've cleared the memory of the loss from their consciousness so that they can just focus on the actions that they need to take to do justice to the next trade. Unfortunately, in real life, this is typically not how traders react. What more often happens is that the trader feels rage, anger, or frustration at taking the loss. And then the pressure to make up for that loss kicks in, and they find themselves breaking their trading rules or deviating from their trading plan on the next trade as they try to force a win. They're keeping a mental scorecard of the day's trades, and they're letting that tally dictate the actions that they're taking on every trade. So in essence, what they're doing is prioritizing the outcome, the P&L, over the execution of their trading plan. What happens then if another loss occurs is that the pressure heightens and this vicious cycle keeps on perpetuating. And this can manifest on a shorter term time frame or a longer term time frame. 3 losses in a day could trigger revenge trading or trading on tilt for that day of trading. A significant career loss can play on the mind for a trader for months or even years after the loss occurs, impacting how they trade after that point. The number of traders that I've worked with in one-to-one coaching who still feel an emotional hangover for a big loss that happened 3 or 4 years ago is surprising. Often this type of event can lead to an ongoing challenge with ignoring loss limits or over trading that becomes so ingrained and habitual that it takes a massive amount of self-reflection for the trader to actually even connect the dots between their current indiscipline and that loss that happened all those years ago. So, to bust a misconception, the skill to cultivate is not avoiding losses. It's the skill of being able to mentally reset fully and as quickly as possible after a losing trade. We're looking for resilience rather than perfection. Now, maybe this sounds easy in theory and harder in practice. So here's a simple 3-step process to help you develop ninja level bounce back ability in your trading. And this process can be applied to help you overcome a loss that's still influencing you, whether that was 2 trades ago or 2 years ago. Step number 1, identify the learning. Apply the growth mindset to your trading. Instead of beating yourself up for losing your money, focus on the learning that's available to you in the experience. Ask yourself, what was the cause of the loss? So maybe it was a lack of focus that led you to miss the correct entry point. Or maybe on reflection, when you look back at it, it wasn't actually an A+ setup and you just jumped into it due to FOMO. Or maybe actually on reflection, you go back and you see that you did everything right. You followed your trading plan to a T and the market just wasn't delivering profits in that trade. So it was outside of your control. Whatever happened, write down the reason for the loss. And yes, it might be tempting to beat yourself up and be angry at yourself, but from a purely high performance perspective, that won't serve you in improving your trading. Imagine an NFL team spending an entire week berating themselves for a poor performance at the weekend that led to a loss. It just wouldn't happen. At the highest levels of performance in sport or in trading, there's actually a financial cost to wallowing in self-pity and anger. Like the NFL players, you do the post-game analysis, you identify the work-ons, and then you make an action plan to improve. This serves two purposes. The act of reflecting operates like a circuit breaker, which allows you to stop yourself from impulsively taking actions on the next trade. It keeps you in the driver's seat of your conscious mind. And then secondly, it shows you the exact area in which you need to improve, which leads me to the second step of our process, and that is making the action plan. Identifying the error alone is just not enough. If you want to make sure that this is not going to happen again, then you have to actually do something about it. So once you've identified the root cause of the loss, then think of 1 or 2 practical actions that you could take to improve in this area. For example, if the loss was down to a lack of focus, then maybe you make an action point around creating a pre-market mental preparation routine so that every time you show up to the market, you're fully mentally, emotionally, and physically ready to perform. Or let's say that the loss was down to a scarcity money mindset. Maybe you create an action point around listening to affirmations so that you can reprogram your relationship with money and so that you're not trying to squeeze every drop of profit out of every trade. Identify the action and then set a goal to achieve these actions in a certain time frame. Aim for 100% accountability instead of staying stuck in navel-gazing and self-flagellation. Step number 3. Cure the emotional hangover. Steps 1 and 2 are very practical and logical, but this one is the most critical out of all of them. Because if you can't actually fully acknowledge and feel and release the emotion associated with the loss, it will keep plaguing you like a bad 80s song remix. And this is the step that most traders leave out or forget to do when trying to reset to neutral after a loss. The thing about emotions, even really challenging ones like fear or anger or frustration, are that they're nothing more really than an electrical charge. And in a healthy state, we would allow ourselves to acknowledge the feeling, allow it to run its course, and in that way, the electrical charge dissipates and we can move on with our day unscathed. The problem happens when we try to deny the feeling or numb ourselves from it, or we try to repress or suppress it in our subconscious mind. In trying to avoid the feeling associated with the loss, you're actually setting yourself up for more emotion-based trading in the future. Try this simple sequence so that you can face the emotion head on, release it, and then detach fully from the memory of the loss. This can be done quickly, or you can do it as a deeper meditation depending on the severity of the emotional hangover. Firstly, name all of the emotions that you're feeling associated with the loss. Once you have listed all of those emotions, choose the one that seems to be the strongest, so the one that's overriding all of the other feelings when you think about the loss. And when you have that, close your eyes and see if you can locate where that emotion or that feeling is being expressed in your body. So it could be tingling in your hands. It might be a tightness in your chest or your throat, or it could even be a dull ache behind your eyes. You're just trying to find the physical place in your body where this emotion is being stored. Once you've found it, then you're going to actually immerse yourself in that feeling. So instead of numbing yourself from it, instead of denying its existence, you're going to allow yourself to fully feel that emotion in all its strength. So you're allowing the full extent of that electrical charge to be felt by you. And even if it's challenging and uncomfortable, know that this is the way that you face and release the emotion, by actually sitting with it. And as you're doing that, ask yourself, what is the judgment that I am making about myself that's causing this emotion to exist? So this would be a 1-sentence statement of a judgment that you are making about yourself in relation to the loss. And once you have that statement, imagine that emotion like the electrical current going from wherever it's located currently in your body, flowing down through your body into your feet, and then imagining the ground just absorbing it so your body is clear of it. And once you feel like that's complete, then open your eyes and write down the judgment statement on a piece of paper. So an example of one might be, I'm failing in my job as a provider for my family because I keep losing money in trading. And when you write it down, then what you want to do is actually challenge the validity of this statement using logic and objective facts. So you're going to ask yourself, is this statement objectively true? Is there real world evidence to support this statement? And usually in the cold light of day, when you're thinking clearly, if you look at that statement, you'll see that it's most likely your subconscious mind wildly exaggerating the significance of the loss. So it might be creating some catastrophic significance for the loss that actually doesn't hold true. So that's the 3-step process for fully and quickly recovering from a trading loss. Let me know in the comments below if this has been helpful, and definitely let me know if you try it out how it goes for you. And if you want to learn more about how to permanently overcome destructive trading habits, check out my free Trading Psychology Masterclass. I'll show you a simple system that you can use to reach elite level discipline and consistency in as little as 8 weeks. I'll pin that link in the comments and I'll drop it in the description box below. That's it for this video. Trade well, and I'll see you soon.